So today we're going to talk about 16.2, preparing a statement of stockholders' equity. We have one objective in 16.2, and you need to be able to prepare a statement of stockholders' equity for a business that is organized as a corporation. So first of all, defining what a statement of stockholders' equity is. It is a financial statement that shows changes in a corporation's ownership for a fiscal period. So here they're just showing us where we're going to get our information to complete the statement of stockholders' equity. So we're going to need to look at our income statement. We're going to need to look at our general ledger, at our capital stock, and then we're also going to look at our adjusted trial balance. A value that is assigned to a share of stock and printed on the stock certificate is going to be called our par value. So when issuing shares of stock, a corporation is going to assign any par value allowed by laws in the state in which it incorporates. Here is our first kind of part of our statement of stockholders' equity. So just remember that we always start with our heading on any type of statement. And so our heading is going to answer those three questions: who, what, and when. Notice on the when here, this is for year ended. We are going to show what is happening throughout the year on that statement of stockholders' equity. Now, our first section that we have on our statement is our capital stock section. So first we're going to label it as capital stock, and then notice we have our par value listed. Okay. Then we're going to put down the beginning of the year, how many stocks we had or how many shares were issued. So here we see January 1st, we had 7,000 shares that were issued. And then we're going to put that total amount. Now, they don't always give us that total amount, so to figure that amount out, we are simply taking our 7,000 shares times their par value of $10. So 7,000 times $10 is $70,000. Next, we're going to list the shares that were issued during that current year. And so here, we always label it too. So issued during current year, and then we have 500 shares that we issued. So again, we figure out that number by taking the shares times the par value. So 500 times $10 is $5,000. Last part here in our capital stock is we are going to put our balance at the end of the year. So balance December 31st. We do need to put our updated amount of shares. So to do that, we just took the shares at the beginning of the year plus the shares that we issued during the current year. That equals 7,500 shares. Okay, 7,500 shares times $10 of par value, that gives us 75,000. We should check our math to make sure. Here we are adding up 70,000 plus 5,000 to get our $75,000 balance. Next section is going to be our retained earnings section. So again, we're going to start with our label, and then we're going to go to our beginning balance. So balance on January 1st, and here is our number. Then we're going to look at our net income after federal income tax. So net income after federal income tax. We're going to subtract from that our dividends. So we label that as less dividends declared during the year. So here we have 15,000. We are going to take those two numbers, and just like it says over here, we are going to subtract those two numbers to get this number here. That number there is going to be our net increase. Next, what we're going to do is we are going to take our beginning balance plus our net increase. So we're going to add those two together to get this number here. This number here is going to be labeled as our ending balance. So balance on December 31st. Last thing we're going to do then is to get our total stockholders' equity on December 31st is we are going to take our balance of capital stock plus our balance of retained earnings to get our total stockholders' equity. Before I move on to our audit understanding questions, I just want to, I don't think that the slide does a very good job, or it doesn't at all, telling us where we get this information for our retained earnings. So our balance of our retained earnings, this 65,000, That number is going to come off of our adjusted trial balance. So in our adjusted trial balance, we would look at our retained earnings to get this number. This number here, our net income after federal income tax, we would be looking at our income statement to look at this number. Less our dividends declare, this $15,000, this is going to come off of our adjusted trial balance. Now, these two numbers we subtract to get this one here, to get our net increase. These two numbers we add together to get our balance on December 31st. Number 1, what financial information does a statement of stockholders' equity report? This is going to show the changes in a corporation's ownership for a fiscal period. Number 2, what are the two major sections of a statement of stockholders' equity? The two major sections are going to be our capital stock and our retained earnings sections. Number 3, where is the information found to prepare the capital stock section of a statement of stockholders' equity? We're going to get that in the capital stock general ledger account. Number 4, where is the beginning balance of retained earnings found? That's going to come off of our unadjusted trial balance. Number 5, when issuing shares of stock, what par value can a corporation assign to each share? The corporation can assign any par value that is going to be allowed by the laws in the state in which it incorporates. Number 6, where is net income after federal income taxes found? We're going to get that off of our income statement. That was the end of 16.2 lecture.